add that to the stream. Oh, there we go. Now I want to have, there we go. Wow, look at that. Amazing. Look at that. There we go. Wanted to have the camera on as well. So you should be able to see should be able to see me sitting here, just dealing with messages on the phone as well. When you get a night like tonight, there's lots going on. So, in fact, not as volatile as I was expecting. So, yeah, hi Cliff, hi JT, Golden Solution. Yeah, a few of you putting some messages in, I can see. Hopefully I'm seeing all messages. I'm just using a streaming software. So I'm seeing messages as they're coming through. Good evening. Puticalo. Good evening. Was I expecting more volatility? Yeah, I was expecting maybe some bigger moves than that. I mean, it's become a nice ranging day, but yeah, I was expecting a bit more than that. Just a bit more. It's not over yet, but really FOMC is, for all intensive purposes, over now. So there's only a few of us here. There's only, I can see, about 23 of us, so not many. But I just thought earlier on, it was a late thing. I thought, I'm just going to do a little review of whatever has happened on FOMC. I've been trading through it, so I'll go through with you my trades. I've been trading with one of my traders actually through it, just on a one-on-one. And so someone I mentor, so I literally just come off the call with him to then start this. So I had to do a quick reboot of the computer and then start this. So yeah, let's have a little look here. My general analysis has been, I won't be able to go into too much detail. Well, a bit, but you're not necessarily going to see everything, I guess, because if you're off the YouTube, you won't necessarily, you'll think, oh, he's got a lot of lines on his charts, you don't understand them, sort of thing. But okay, if you're going to see my channel first of all, so we've got my declining channel here on the daily chart. I've been trading within this channel for some time now, since the beginning of the year, really, or certainly since late February, it got formed, the channel. So when we came down a week or so ago, and then we bounced. Bear in mind, we came into my horizontal support here. I'll get to your questions in a minute, JT, because I'm going to cover that off anyway. So my horizontal support, which was once resistance, then becomes support. So I didn't know if we were going to break down and then just carry on going through it, because not all supports don't always hold, as we know. But then when we did rally, that was like that first inkling, okay, we've come back within this channel. However, and I'll be perfectly honest with you, I sold this with our traders. So I sold this last week at about the same price as where we currently are, actually. So, but that's a longer term trade, that sell, and I'm going to be looking to add to that sell. But I'll tell you why in a minute. But as it currently stands, I'm looking for more upside on the euro. Now that upside might last for a few weeks. That's how I'm looking at that. I'm not looking for this to completely roll over. If it does, fine. At least I have a short in the market. But I'm looking for a little bit more upside. And my traders, if any one of them is here, will confirm that is what I've been saying this week. I put some analysis out for another group just this morning on that very topic. But really, I'm looking for a bit more upside to come, for price to come within the channel here a bit more, at least to halfway within the channel. Because sometimes prices don't always bounce from one end of the channel straight to the other and back down again. They don't always do that. So there's a minimum to get to mid-range, but maybe further. But really, I'm going to be looking for signs to, oh, thanks, Nikunj. Yeah, Nikunj has just confirmed that. So I'm looking for signs to then short, okay? That's what I will be doing if we can come up higher. That's my general view there. However, in the short term, that's been a dovish FOMC. I went into the FOMC, fun enough, with some, small longs, which I added to as we got into the meeting, like I said, with one of my traders. So I'll go through all that with you in a minute, and I'll explain a little bit more as to why I think there might still be some more upside. And that's how I'm playing this anyway, is how I'm trading this, that there might be some more upside. So yes, I went into it. So why did I go into it long? I went into it long, partly because of this channel, partly because we all pretty much knew that Powell was going to be dovish, but I really didn't know if I was going to get stopped out or not. I genuinely didn't know. It was the risk. It was only a small position in relative terms. And this was only on my challenge account. It wasn't on any of my other accounts. So it was only on the challenge account. And when I was on the call with the guy I mentor, the way I trade the challenge account is always different to how I trade my other accounts, because it is naturally more aggressive. So it will have more volatility in the account, but then its gains will ultimately be higher, but it will have more volatility within it as well. So anyway, really for me, and I'm going to just give you this as a little bit of a takeaway for those of you who aren't members of us at Easy Trader. I'm just going to take some of my bits and pieces off my chart here, because I just want to point something out to you. Okay. Right. So price. This is the weekly chart now. Price had come down to my red line, my red horizontal line, and the lower channel line last week. And we've bounced. It's important to note that we had at least bounce. So Cliff, you'll know this, remember this. Price had come down into a support zone, but the 20 moving average, my blue moving average, is still facing up. That's always a warning sign to me that, hold on a second, you've had a nice run down, but we have hit a load of support, technical support here, and yet that 20 still kinked up. That is always going to be a bit of a warning to me that price might still want to come higher. And it happens so much. I use it on intraday charts, like hourly time frames, 4 hourly time frames, up to dailies or weeklies or whatever. If I see a moving average, oh yeah, you can see me. You can see the moving average is facing up, but price has come below it for a period, but has hit some support, then very often the price will come back up, and quite often come back up for that moving average. So that 20 moving average is currently up at 120.59. So the potential is for the euro to work its way up at least towards that. They don't always get to hit it, but the potential is to work its way up towards that. So just thought I'd just share that with you. It's always something that I will use in my overall analysis if I see that sort of stuff. So that was part of my analysis coming into this week, was seeing that pattern. So coming into that week, seeing that pattern, saying, well, I'm looking for these signs of reversal. Now I'm going to take you to a 4-hour chart, and I will come back to your points in a minute. And we still don't know if this is definitely still going to play out. Nothing's 100%. All I'm saying is I'm long, and so far it's working out. So another thing that I look for, I haven't got a pen here, have I? Because I'm just doing a live YouTube broadcast. I haven't got a pen. Is see all this price action here, my black moving average here. And what's happened is price came from making its low, came up to the black 50 period moving average, and then has just hugged it. It's what I call hand railing. Again, our members know this. So, and I was discussing this with our members in our live trading room just yesterday, that we've been hand railing. So when price comes up to a key moving average and then hand rails it, I would normally look for an upside resolution as it's coming this way. If it comes down to a moving average, then hand rails it, then I'll look for a downside. So that was something to be watching out for as well for me. So that the weekly charts and the support and the channel meant that the way that I've been coming into this was looking for those excuses to get on the long side. And I still think there's a bit more upside in this. I think but somewhere between 120 to 120.50 is the zone that I'm looking for. Now that might still take some time. You see the euro's backing off a little bit at the moment, and that could still take a week. Might not do anything tomorrow. It might just chop around still. It's not broken out of these highs from last week yet. So, but that's where I'm going to be looking for it to work its way towards. And then, so we've got dovish pound at the moment. And what he's essentially said is, well, we're in wait and see mode. We're not going to really do anything yet. And he's just reiterating the same sort of stuff. We're going to let inflation overshoot and all that. But I think what will happen is market forces will come in. So better economic reports coming out of the US as we go forward over the next 4 to 8 weeks. And if that starts to come through, then the market will then start to say, stronger dollar time, and that will be possibly the next leg down. Because I actually, in the medium term, I'm bearish euro dollar. So I'm just seeing in the shorter term over the next couple of weeks or so, the potential for the euro dollar to come higher, but then I'm going to be looking for it to roll over. That's my view. I'm not always right. We're traders after all. We're never 100%. We're just we only need to be right part of the time. But that's the general sort of plan that I'm going to be trading there. Right, okay. Buck the downtrend. Well, I've been short, fun enough, through this. We actually closed out of our shorts a week or so ago when it came down into this zone. I can't even remember where we exited now, but it was somewhere over here. And then really I've been in the doldrums this last week. I haven't really been doing anything, actually having a few little losses here and there over this past week or so, and that's typical of what I do. So I'll be testing the market and just throwing some trades out there, and that's normal for how I see it. So so I haven't been making any money over the last week or so, but yes, I did have a very good run down there. And so now I'm in this next phase of building shorts overall for that bigger view that I've got, or maybe going out a couple of months or more, but certainly in this shorter term over the next couple of weeks, I am looking for that. And that's where I'm positioned right now. Do you think the S&P will get to 4,000 then roll over? Hi, Michael. I don't really care, Michael, to be honest. It might have a reaction from that. It's a level that lots of people are looking at. Let's go to the S&P futures here. It is a level that a lot of people are looking at, that 4,000 area. Yeah, it might do. But I'm not really that the S&P doesn't excite me, Michael, particularly, because it's just in a trend. It's like if someone says to me, "Oh, tell me about Bitcoin right now." Well, Bitcoin's just been in a great trend. There's not a lot that I can really. I see Bitcoin's benefiting here tonight now as well. There's not a lot you can say about a market that's been in a great trend. It's going up. What more can you say? But if I've got a market which is up, down, or sideways, like a bit more like the euro here, at least I've got lots of technical levels, trend channels, and things like that I can get my teeth into with the likes of the euro there. So let's just take this down then, because although I'm not here to tell you what I have done, this live broadcast is also here to sort of say to you, you might want to have a think about some levels here. So let's actually take you down. We're at 7:30. Okay, my candle here, this is a 4-hour chart. This will close in half hour's time on my chart. So this is e-signal charts here. So this is going to close in half an hour's time, provided in the next half hour it doesn't sell off too much and it holds generally as a nice solid bar that closes in the top 20% of its range. I see that as a nice early indicator, nice and positive. Some of you, if you're thinking, oh, I don't know what to do, then I'm telling you what I'm doing is I'm buying. I've already bought, but I'll buy some more on a bit of a pullback. Okay, so anywhere around about 119.60 to 50, or 50 to 60, should I say, that sort of range. A nice little bit of a pullback is where I'll be looking to still get maybe another position or two in. So these are the positions I'll show you on the challenge account. It's only small at the moment, but this is where I'm at the moment. So I've built these positions up here today. But this is the short I've talked about, which has now gone underwater, but that's fine. That's sitting there. And these are the positions that I've so far accrued. But if I can get any more in, then I will. And so that's what I'm going to be looking for, is that sort of 50 to 60 sort of area to see if I can get another unit or whatever in. I'll have to look at my overall risk there, with the view to run this to somewhere between, as I've already said about what that weekly 20, where that's at. But so I'm looking for somewhere between 120 to 120.50 is the zone that I'm looking for. Now, we all use different analysis, and sorry, I know I'm talking, and some of you are putting comments up. I'm not gone back down to them yet. We all use different tools for the job, and it doesn't really matter what your particular tool is. I like moving averages. Other traders like using Fibonacci retracements. They all do the same job, but just in slightly different ways. And so whatever other levels and things that people use. So that doesn't really matter. What really matters in trading is the trader. It's the trader that makes the money, not the strategy. And yet people get so caught up in strategy that, of course, strategy is important. You need to have an approach, a method, some strategies for approaching the market, but it's the individual that is really the edge, as many of you guys who are experienced know that, because it's your decision making, your ability to hit the button at the right times to make those critical decisions. You can have the best strategy in the world, and if you hesitate and don't take a trade, or have a couple of losers and then don't take a trade, and all that sort of stuff, then you're still going to make mistakes. Doesn't matter how good the strategy is. So I've seen traders have automated strategies and they'll still muck up with an automation strategy. If it's good, then they'll still end up switching it off. They'll have little wobbles at times and stuff like that. So anyway, it happens. So yeah, strategy and the tools you use aren't so it doesn't really matter too much. But all I'm saying is what my strategy is here, having just gone a little bit over the higher time frame charts, the channel, the weekly charts with that weekly 20, some of those other things that I've talked about, and the price action, of course, which is important, and the Fed and what they're saying. I don't think that what the Fed have said is now immediately going to get sold off. Of course, as a trader and a risk manager, I always have to be prepared for it to get sold off. Who knows? Maybe it comes all the way back down tomorrow. But that's what our risk management is for, because nothing is 100%. But I'm trading until proven otherwise for the euro to go somewhere to 120 to 120.5. Maybe it goes higher, but I'll be happy with banking some profit, at least by the time we get into that zone. All right. So that's how I'm looking at it. So I'm going to be looking at this. I'm going to be with our traders tomorrow morning. And if I get a pullback overnight, if it doesn't happen here this evening in the next hour, then I'll be looking when I wake up in the morning and seeing, okay, do we get a bit of a pullback? If it does do a bit of a pullback, then I'll be looking to add to those positions. Sorry, right. I'll come back to some of your comments here. Do you trade any ags? No, I don't. Again, ags are, it's like with anything. I get people asking, oh, do you trade crypto and stuff? I've owned, and I do own crypto, but I don't trade it. I don't, I have sold most of my cryptocurrencies, as I've announced. If you've seen any of our YouTube videos, you've heard me. I've sold 3/4 of my position now, but I don't trade it. But it's funny with trading. You can be a trader who trades a bit of anything. You can have that sort of style that you'll go to the markets that are on the move. I'm a trader who is very much a believer in focus. So I'll trade the same markets over and over and over, and I'll just trade those. So I won't go off and say, oh, such and such is moving and having a lovely run, I'm going to go and trade that. That's just not my style. So I've always been a believer in focus. So for me, I trade the usual culprits. I trade the major currencies. I do trade the stock indices at times. I'm in a trade on, fun enough, on gold right now. So we got long with my traders just this week on gold, actually. So we got long, what day was it? Monday. I think it was Monday. So, and it's just starting to, Monday, it's Wednesday, isn't it? Yeah, so it's only here. So I got in, you could say, oh, late, I didn't get in off the lows. But again, gold's got a nice channel here. And so I've seen gold as being a potential hedge against that short on the euro as well. So there's always other things going on, but yeah. So I'll trade gold. Occasionally I'll trade oil. So there's more than enough there. I don't need to be trading too much. So that's what I generally tend to do. What's your on short on a current level? What? What's your on the current level? Oh, maybe. What's your view maybe on the current level on the DAX, which is currently overbought? There's no such thing as overbought and oversold, in my view. On the DAX, let's go and have a look at the DAX then. Let's bring up. Bear with me. I think I've got the DAX on here somewhere. There it is. Yeah, I mean, it might well be overbought. I assume you mean on some sort of indicator like a stochastic or something like that. I'm assuming you're meaning in that regard. But I don't tend to. The way that I look at things like overbought, traditional overbought, oversold type indicators is that when a market's trending, an indicator like a stochastic will go into the quote unquote overbought zone, but it can stay up there for long periods. You look at any trending market, it'll just stay there, or it'll wobble up and down up there. And you'll get all these traders thinking, oh, it's overbought, I'm going to sell it. And that's why so many traders around the world lose money, because they use indicators in the wrong way. And so there's nothing wrong with the indicator as such, but it's a case of using these indicators at the right times. So a stochastic indicator is fine with a market which is generally in a range bound. Then something like a stochastic would be very, very good in that type of market condition. In a trending market, then not so much. So the DAX, as we can see, has been in a nice trend, generally speaking, over here over the last several months. So an indicator, and I'm just saying this because I don't know whether the person who has asked the question is referring to a stochastic. I'm just using that as an example. But if I was to put a stochastic on here, then it probably would be in the traditional sort of over 80 range. You can see that just by looking at the price action. So yeah, so anyway, so that type of thing, I'm not bothered about things like overbought or oversold as such. Hopefully that answers that question there. Your supply and demand, well, so that's support and demand, support and resistance, really. And so, yeah, like you said, it's all you're an unfilled order human search bar. Okay, so that's what supply and demand is. It's levels of past activity. And so there are different ways of looking at that. So you can look technically, obviously, at a chart and put lines on like I will do, or you can use volume profile, all of those sort of things. They're all going to show the similar sort of stuff, and to show where there's been prior levels of trading activity, which means that if price goes back into those zones, then that will create resistance or support. So there's many tools to do the same job. And so, like I say, I have tools. I don't impress upon people and say you must use what I use, because I know mine are fine for the job. They work for me. But we've all have different personalities, and so different traders are going to have different tools that they prefer. So if you took two carpenters, for example, and you said to them, you can see my wall behind me, okay, or two artists. Look, I've got my picture of my dog up here on the wall, and I took two artists. Well, and they both said yes. We'll draw your Jensen for you, and I would end up with two entirely different pictures, because they might use slightly different brushes, maybe slightly different pigments or whatever, in order to create the picture. They both create a picture of Jensen, but they both look different. And it's the same with trading really as well. Where did I get that anecdote from? Anyway. Yeah, okie dokie. Yeah, I mean, again, RSI is another indicator that you can use for, that people will use for overbought and oversold. Again, I think it's with anything, it's about context. You can, I remember, so you can use anything, but it's just a case of trying to put it into the right context. So like I've just said about a traditional indicator that measures overbought and oversold, like stochastic or RSI, it's just about having that, like I said, that context. If you've got a really strong market trend, then, and your RSI is massively overbought, so to speak, well, I would want to ignore the fact that it's overbought, but if it pulls back, then that's telling me I'd actually want to buy. Yeah. So it don't care that it's actually overbought. I'm not going to try and sell it. I don't want to stand in front of that. But if it pulls back, then that's my indication sort of thing to buy. So again, it's the context of how you use stuff. And I remember meeting many 20 years ago, met the late Mark Douglas, who many of you will know, the author of Trading in the Zone. And I remember him saying, if you put an individual in a prison cell for 6 months and you gave them just a 10-period moving average, and they had nothing else but a chart with a 10-period moving average and a price bar on it, because you've got nothing else at your disposal, you probably end up making it work for you. We end up having so much stuff available to us that we get, do we give everything the same amount of focus that we otherwise would? And I think he was just trying to make a point, but yeah, I mean, you could probably take almost any indicator and make it work if you gave it the right context. And what he's saying there is, put someone in a room for 6 months and they just got one indicator, doesn't matter what the thing is, you'd probably find a way of making it work. Yeah. Controlling the emotions are without doubt one of the most important things in trading. People get so caught up in the art of trading, but the real art of trading is the art of being able to manage your emotions. And so being able to, someone on our YouTube channel just earlier today was posted a question to me on saying that he's struggling with fear. So I said, what element of fear is, because fear manifests itself in so many ways in trading. And his fear had manifested itself because he had actually had a winning spell. So he'd been making money for about 3 months, I think he said. And he said, and now he's fearful of giving the profits back, because in the past he's lost money. So he's got the demons from the past are rearing their heads again. Now he's making a bit of money and saying, we don't want to lose this money now. And of course he's now tightening up. His trading's all tightening up because he doesn't want to lose. So now he's not trading or hesitating, and that becomes a problem. I love trading because there's always things that are gonna, even when things are going, even when you're actually making money from the markets, things like fear can come along. And so it's a constant thing. it's working on the mindset is a constant thing. I always use the anecdote of trading is like having a pot of boiling water on your stove. If you don't keep, or certainly the mindset side of things, if you don't keep giving it heat, it will again become cold. So you have to keep working on your mindset and reminding yourself of all these different things. If you've got fear issues or greed issues, and before they even manifest themselves, constantly going through all this work, because otherwise, like that pot of water, it will become cold again, and then you end up becoming like a beginner again, and then having all those issues with. And I was talking to someone. It was yesterday. It was in our trading room, I think, and they said, "I don't know what's happened. I've just not been trading well the last couple of weeks. My mind isn't in it." And he'd banked a profit on gold, fun enough. And he'd had a nice profit, but he'd come out early and he was really disappointed with himself because he'd come out, I don't know, about $8 short of his target. And he said, I just didn't want to give the profit back. And so he said, I just feel the last couple of weeks. And sometimes it's just that you've just not been concentrating or giving the attention to your mindset. And that's all it is. And then all of a sudden what happens is our gut instinct just kicks in again and says, bank it. And we don't want to trade on gut instinct, even though I did a whole video on gut instinct today. But that's what I was essentially saying. We don't want to trade on gut instinct. JT, yes, trade management does come in there, but there's a lot more to trading than just trade management, because you can be trade managing and still be itching to bank the profit. So you may well be managing your risk and stuff, but unless you're constantly reminding yourself that if you're a target-based trader, that you've got to hold for that target, because if you take 100 trades, but actually a lot of those 100 trades, the ones that are winners, you actually bank your profits short, then we all know what's going to happen, because you need to be holding out for those targets in order to pay for the losers and give yourself a profit on top. And so it's all that sort of stuff that we have to keep reminding ourselves, because it's very easy we all know what we should do, but it's a case of constantly going over and repeating the message to ourselves, the self-talk, why we can't bank that profit $7 short. If I did that on the next 100 trades, that's going to massively impact on my profitability. It makes me feel good right now to bank that profit, but actually I know that I'm doing the wrong thing, because if I keep on doing that sort of thing, then I'm giving up too much of my gains. And it's just that self-talk that traders need to have, that I think that a lot of traders could either forget or just lapse out of it, and some haven't yet got into it, which is important. Matt, dollar index, yes. Do you not think it looks like it's put in a confirmed, let's go and have a look. Reversal structure after popping out of a downtrend line that has been in place since March 2020. Well, the dollar index to start off with is essentially a euro dollar upside down. So if I turn my euro dollar chart upside down and invert it, so that's what I've just inverted it. The only thing I can't do is change the colors of the candles. But so this is essentially the dollar index right now. So now I'll actually take you to that dollar index actually, rather than just doing that. So let's get rid of that. There we go. So do I not think, or do I think that, what's the question? Reversal after popping out of a downtrend line that has been in place since March 20. So let's go whiz this out a little bit. There we go. Do I think that this is in a confirmed reversal off the lows and whatnot? For me, what I was saying earlier, Matt, was that, yeah, maybe you weren't here earlier. Ultimately, I'm still looking for the dollar to still have some more strength over the next couple of months. I'm seeing what we're seeing here today, and over potentially the next week or two, as a short-term pullback. The dollar has essentially been rallying since the beginning of the year. And how I'm looking at this at the moment is just a bit more of a pullback for the next maybe couple of weeks, maybe, and then I'm going to be looking for it to gradually then turn up again. So that's how I'm looking at it. If that's what you're talking about there. So yeah, at the moment, I still think that this I don't think that the dollar index is quite done yet on the upside, is what I'm essentially saying. I think that in the near term, next week, 2 weeks or so, I do think that it's got that potential to be a bit softer, and it's just a bit clearer for me by looking at the euro dollar. So and that's what's giving me that view. And I think also combined with the fundamentals as well. If we really think about it at the moment, the euro had a great run against, and all the currencies had a great run against the dollar last year. I think that the US are going to be well ahead of as we know, of Europe on vaccine rollout. Their economy is going to be doing much better than the eurozone in the coming months. So we should be seeing more strength really in the dollar for the next few months anyway. So I'm seeing this as just a bit of a pullback based on what Powell's saying. He's helping the dollar retrace here at the moment. But I think what's actually going to happen is, as we go forwards in the next couple of weeks, 2 or 3 weeks, if we start seeing some economic releases coming through, which start picking up and being a bit more positive, then we'll gradually start to see that dollar index. That's how I'm looking. That's what I'm looking for anyway, to see the dollar strengthen again. Of course, I could be wrong, because no one's ever right all of the time. But that's That's my playbook. My playbook is soft in the short term here. So therefore, what I'm looking for is a euro dollar continuation of this euro dollar bounce within this channel, but then I'm going to be looking for it to roll back down. As I was saying earlier on, based on that weekly chart, I'm overall see a bounce here within this declining channel. On the back of what Powell's been saying, and on the dot plot there tonight, no real changes in the dot plot bar one. So I think in the near term, the market's going to cheer that, and so it's risk on. But then I think then the market will wake up to the fact that the US economy is going to be doing a lot better than the eurozone, and then the market sort of remembers that type of thing. And this is just the way it goes, really, as the economic news releases come out, maybe some other encouraging information coming through, and then all of a sudden the dollar strengthening will then go into its second leg, which I'm looking for to ultimately come down to this lower trend line of this rising channel overall on a weekly chart. So yes, I'm looking for more dollar strength, but maybe not just yet. Might just need this little bit of a bit more relief over the coming couple of weeks, first of all. Because, of course, the market's got to suck in a load of traders as well, hasn't it? It's got to suck a load of traders in. And so that's what I'm looking for. Do I look at the COT? I do. Yeah, every Friday. Just get a glimpse of the COT. I don't think the COT's been that important to me recently. I was finding the COT more important last year in that trend with the euro dollar. I think that generally speaking, there was a lot of talk last year about the speculatives, their positioning in euro dollar. Euro dollar is the biggest currency contract out there, so I base my core analysis all around the euro. And so yes, they had big net long positions, but they have started to come off a little bit, and I think that's been encouraging. That that big net long position amongst the hedge funds has started to come off a little bit. So and as we've seen, generally speaking, the euro's been coming down a bit, so it's quite natural to see that. What you tend to find is that the hedge funds are very good at being in trends. They're not good at catching turns. So I don't look at the COP report for seeing, identifying any turns, because they're generally not very good at that sort of stuff. So, but generally speaking, yes. I was using it a lot, fun enough, last year when the euro had turned up last year. Where are we? Had turned up. I'd already seen that the specs were long, so I'm more interested in them. I'm not interested in what the commercial hedgers are doing, because commercial hedgers aren't trying to make money speculating in the markets. They're there to hedge their currency exposure. So I'm interested in what the hedgies are doing, and they had all gone long last year, and that was a good sign, especially with the retail traders all going net short. So it was a classic last year. Yeah, I mean, the big boys, as you're saying, they are still net long euro dollar contract, but the market will ebb and flow even when they are. So for me, yeah, it'll be of interest. Where it'll start getting interesting is if this plays out over, I estimate, the next 2 to 3 months. If this plays out, the euro may bounce, and it could hold up for weeks. And then by the time it rolls over, I think the playbook could well be that this takes several weeks, then rolls over. By the time it rolls over and it hits this trend line here, my 50-week moving average, it's actually doing a double bottom last week's low. That's such a common thing that we see. So that it may not be that it goes that much lower, but certainly as and when the dollar or the euro dollar pulls back to this sort of zone, I will then be looking at the sentiment indicators at that point and looking to see what those hedgies are up to more at that point. I'm not too bothered about what they're doing right now, but that's when it'll get more interesting for me over there. Quick comments, anything else? Hi, Michael again. Do you think the euro dollar will ever break the quarterly trend channel? If I go out to a quarterly chart here, this was really improv tonight, by the way, guys. I just only thought of it this afternoon. I thought I'm going to do a post FOMC, live YouTube review. And so anyway, let's have a quick look. It's nice to see some people watching live through Facebook as well, I see. So do I think it ever will break it? Yeah, it's a lovely channel here on the quarterly chart of the euro. Of course, yes. Of course, one of these days it will break that, Michael. And it's something that I'm watching out for, because if, let's say, the dollar strengthens a lot more than what I'm expecting, and we go into a much bigger dollar strengthening cycle this year, then it won't take too long before we're back down at that channel again, Michael. And of course, that will form part of my analysis. If we get back down there again and we look like we're starting to break, then I would assume next time that actually we break and we go. So we've had a couple of attempts. We had the attempts back in 2015 through to 2017. That was through this period here. And then obviously we had that period through 18, 19 down here. So if it came back down for that channel line again and started to break it, then I would certainly be looking for a run down to not only continue to break that, but to come back down and challenge those lows of 2017. But again, I'm getting well ahead of myself now. That's a quarterly chart. That could take 2 years before we see that. I don't know. But certainly if we do come down, then I would be, Michael, yeah, looking at that. Yeah. It's a fast, I find this it's why I love the euro dollar contract so much, because of the bigger picture. Every step out I take, I see something else with it. And so I find it such a fascinating chart, and have done for the last few years, really since it came down in 2015 and got down to the lower trend channel line, that I found it. You could look at the price action and say, well, it's not that interesting, but of course that's a quarterly chart, and it's been a fascinating ride through that whole period. So yeah, if you haven't got that on your charts, then you might want to put that channel on. Do I trade Swissy? No, I don't really. Occasionally, but not really. It's not a market that I go to. I think it's, yeah, because the Swiss National Bank traditionally have pegged the Swiss franc to other currencies like the euro, that I've never really been bothered about trading it. So short-term trading is fine, but I've just don't really do much with it at all. Not for my manual trading, no. You should do more of this market recap. It's great for your channel. Oh, right. Okay. Well, there's only 44 of us here. I don't know how great that is for the channel, but I just felt like doing it. Yeah. And I should do more live stuff, and I will do more live. I know I did a live broadcast. It was only in February, wasn't it? I did a proper official sort of webinar, but yeah, I'll do more. And so I would have done my live trading with you this evening. But I was, like I said, I was on a call with a chap that I mentor, and so I was trading with him through that. So he gets priority. Sorry, but anyway, so that's where I think we're about there. Let's have a quick look again at this hourly chart. Oh, the 4-hour chart's just completed. So that's the hourly. Let's go and look at that 4-hour. It's a lovely finish on that bar there. So if I wake up tomorrow morning, I said like around about 119.50 to 60, and I'll be looking to add to my positions. So I'm just giving you a heads up of what I'm doing. May work out, may not, but that's what I'm doing. And I'll be looking, that I'm looking for between 120 to 120.50 as the sort of zone that I'll start banking profits. I think it could go a fair bit higher than that. I think it's got the potential to, looking at that weekly chart, but I'll be content enough with that zone. Anyway, yeah, I think it's time. It's 8 o'clock. I better say good night, actually. So thanks for coming along and giving some great questions and chat there. But I guess I better go and see what my wife's doing. But we'll do it again. So I better press end broadcast. So yeah, welcome to some of you who have not done this before, and we'll see if we can do some more periodically. Take care for now.